Hello financial investors and welcome to the channel. My name is Brent and today is the very 1st of June 2020. We're going in now halfway through the year, so pat yourself on the back. You've made it now 6 months here into 2020 and it's pretty chaotic out there. So what we're going to be doing today is taking a look here at stock futures, which are currently positive. We're going to go ahead and jump into Facebook, go over some of the companies that are going on earnings this week. I know I'm looking forward to 3 of them. Then we're going to go ahead jump over into the M1 Finance Roth IRA. Take a look at the performance for the week, what stocks were up, what stocks were down within the portfolio. Also, what dividends were paid out this past week and what are we going to be buying this week? I do have roughly, I believe, 2 or 3 companies here in mind, so we'll be covering those in today's video. So with that said, if you are brand new to my channel, have not yet subscribed, give this video a subscription, hit that button below to subscribe. If you do enjoy this video, find it helpful, entertaining, give this video a thumbs up. If you have any comments or questions, drop them into the comment section below, or if you have suggestions on, I saw a couple thumbs down in the past video. I think that was because of my volume. I had been streaming with my kid on another channel, doing some videos for gaming, and I think my volume had been adjusted a bit too low, so hopefully this volume is a lot better going into this video. And let's go ahead and get into the video. So stock futures 0.39 right there. I went ahead and refreshed the page and they're kind of staying positive overall, but they're not high by much. Now the big reason for this right now is because overseas in the China markets, we have also England that had just opened up. It's 1 o'clock right now in the morning when I'm recording this. The markets opened up over in England and they're up by 1.61%. But the one to focus on right here, which is the Hong Kong market, which has been up for quite a while now, is up roughly positive 3.33%, and it's staying in that range. So really a lot of the tensions between the United States and China that had been going on towards the end of the week last week is just sort of shrugged off here for this upcoming week. So we may see the market continue to move higher. Last week we saw the FANG stocks, Facebook, Amazon, Netflix, Google, Microsoft, they all took a break. Only Apple and I believe Google were positive on the week, whereas the rest of them were negative. Now, and the rest of the market moved up 3% last week, which meant that the FANG stocks took a bit of a break. That makes up 25% of the S&P 500, and the rest of the index, the companies within the index, that other 75% essentially move the market higher. So we may see some movement together with the FANG stocks and the rest of the smaller mid companies within the S&P 500, moving the market higher as a whole. So that is something we'll have to see. Now, the 3 companies that I'm looking forward to going on earnings this week is on Tuesday, we have Zoom. That's been a very heavy tech company, especially with the work at home environment. Then on Thursday, we have Smuckers, kind of an interesting company that I have been looking at. Really not invested in it myself, but just kind of interested in it. And then there was one other, which was Broadcom. So Broadcom, they're also on Thursday. So we have Zoom on Tuesday, Smuckers, and Broadcom here on Thursday. Let me know in the comment section below, are you looking forward to any specific earnings? I think Cinemark is going to get wrecked, having closed their doors, and I don't know if they're completely reopened. I haven't gone to a movie theater in quite a while. I think Sonic was the last movie I went to, and I took my kid to, but have not gone to a movie theater since then. So we've covered futures being positive here going into Monday. We've also covered a few companies going on earnings this week. Now we're going to go ahead and jump into the M1 Finance Roth IRA. Now currently overall we're positive, roughly 11.7% as far as market gains. We're up $198. It's the dividends that have really helped keep this portfolio positive here during this sort of craziness here in the market. Now, as far as the 1 week performance last week, this portfolio is up roughly around 3.43%, with most of it coming from market gains of $733. And we did make some dividends. I believe, what was it, Waze Company went ex-dividend last week on the 28th, which was, I think, either Thursday or Friday, but it went positive last week. So kind of looking at the best performers, which companies were the best performers last week, we had JP Morgan up a whopping 8.76%, taking that first place above all. Walgreens coming in second. Walgreens have been pouring cash into that one here recently, trying to get it up to a nice threshold, and it's been working out very nicely now with it coming out of those those lows there. Genuine Parts, also another company I've been trying to pour cash into. I just started to kind of move more capital into it this last week. It is on my buy list for this week, so we'll take a look at it here in just a second to see how much is it in the red still. If it is in the red, that way we can kind of allow dollar cost average into it, lowering our unit cost, increasing our yield on cost, and increasing our overall dividends and shares in that company. Lancaster moving up 7.5. Again, another company I've been trying to buy up here recently. Genuine Parts, Lancaster, Walgreens were all three companies here that I've been kind of buying into in the short term. And then as we kind of move down the portfolio, you can see very little red here. Right here down towards the bottom, only three companies this week. 1, 2, 3, 4. Guess I can't count. So 4 companies this week actually negative. The worst performer here being ABM Industries, followed up behind by WB Carey, a real estate investment trust, Apple, and Walmart. So I think Walmart and Apple are some of those safety companies that have been doing really well lately. Apple is, I believe, $220, $230. I believe I could just click on here and just kind of find out. But yeah, $317. So I was a little bit off there, just a little bit by $100, you know. And Walmart, one of those safety plays that has done really well lately, is just, you know, slightly pulling back there on the week. So really not a whole lot of bargains out there. Maybe, you know, looking at ABM Industries, I'm not sure how positive or negative that one is overall. If we jump into it, we can see that overall the position is negative 5.68%. Oh, here we go. Click on all. Oh, okay. So overall, this company is up 36.55% with $95 of market gains and $12.87 of earned dividends. So overall, still very positive in that company. The recent dip here in the past week is probably just because of how much it has moved here in the short term in the positive direction. So that is the 1 week performance there. Jumping into the activity, I did not get any dividends last week. I don't believe last week was the week of the 25th through the 29th. So all I did was I made my buys at $55.96, and then I deposited my cash on Friday of $50.23. So that is all that we have available currently this week, $50.23. Now, this isn't too much as far as the amount, but it does beat the sort of feature. Now, in order to buy on the M1 Finance platform, you need to have a minimum of $25 on your balance. That way you can make a trade. So that is how much at a minimum I wanted to keep. And based on the amount of equity that I have remaining that I can invest in a Roth IRA for 2020, divided by the number of weeks, that left me with $50.23 on a weekly basis until the next, I believe, 30 or so weeks is how much we have remaining in 2020. So that'll last me all the way till then. So no dividends were paid out this past week. Now, jumping into the portfolio, this is updated for the current time. My base investment is how much this portfolio has had invested in it is $21,492.91. And our total value here is $22,776. And we've made around $1,051.19 in straight dividends. We have that $50.23 sitting in cash, and the invested difference between how much our base investment is and what the current total value of this portfolio is a difference of roughly $999.38. So that's how much we're kind of positive in the green currently. And, you know, this is the second year of this portfolio, and starting in the end, 2018, at the very beginning of 2018, 2018 was essentially a flat year. 2019, we went pretty positive, and 2020 we lost everything for 2019, plus went even further, and we're just slowly recovering. So even during this time frame where the market really hasn't moved in these past 2 years, we've still been able to collect dividends and buying back more shares. So in the upcoming, say, 5, 10, 15, 20 years, the dividends is what we're sort of investing in towards are the share counts. And as long as we continue to buy and hold solid companies, the dividend itself will be fairly safe. Now, there are a couple companies in here that were very high risk. that are no longer paying dividends. So there's a couple in here that are kind of airing out. You can kind of see they had very low amount of dividend growth. That was one of their risky factors. Dividend growth 7 years. They had a very high payout ratio. And also down here, this one had a low payout ratio of 58.4%. But as far as the years, actually, Tanger Factory Outlet had a solid number of years, at 27 years of growing and paying out dividends. So it's unfortunate they suspended it during this downturn. We'll see if they reopen the dividend, continue to pay it out in the future. Also, we had $82.67 that were paid out in May. So May was a very good month. You know, we're nearing that $100 monthly income from this portfolio. We're almost in the third year, say 6 months until the third year in this portfolio, and we may hit roughly $100 per month by the end of the year. So April, we had made $65. March, we made 70. So 70, 65, and 82. So right there, that's, you know, almost $300 there in a 3-month time frame. So by the end of the year, the dividend income did go down slightly due to the two companies that cut their dividends. So we'll kind of see how the annual income adjusts in the future if these companies reenact their dividend. But anyway, enough talking about that. Let's go ahead and go into which specific companies I'm looking at investing this week. So our two every month two companies, Main Street Capital and Realty Income, are both positive by a substantial amount, 19%, 23%. I really wish I had been able to buy more Realty Income when I started adding it to my portfolio. This is a fairly new stock into my portfolio. Main Street Capital, I really was happy to add quite a bit of equity into that one when it was down. So those are really positive. Now these in the sort of mid blue, not really like bright, not really dark, but in the middle blue area, these are my months, these are my companies that go ex-dividend this month. So Altria, pretty high risk at the moment, and I don't want to add any more equity. It has a cost basis of $9.92. I'm going to let that one kind of sit. This one right here, Avery Dennison, down 0.54%. This one is sort of a higher risk. You know, it's not like a high risk, but it's not on a 50-50%. This one would be like a 51. You know, if you're asking me if it's higher or normal based on a 50-50 chance, I would say that Avery Dennison is on the higher risk just because of the dividend growth of 9 years, and maybe the company potentially, you know, who knows in the current circumstances of the market. So I'm not going to be adding any more equity into that one at this time. Cardinal Health, positive. Digital Realty Trust, all positive. Essex Property Trust, positive. These are two real estate investment trusts, both positive. Genuine Parts, this one here is on my buy list this week. It does go ex-dividend here shortly, so this one is down 6.56%. Genuine Parts, let's pull that one up, goes ex-dividend in 2 days on June 4th of 2020. So June 4th is this Thursday. So it is very much on the chalkboard as far as companies that I am buying. So Genuine Parts is number one here on my buy list. Kimberly-Clark, positive. Lancaster is also on my buy list here. So we also have Lancaster. This one goes ex-dividend in 6 days. So that is on the 8th. That is next Monday. So maybe this Friday, maybe this week, I'll add a little bit more capital into this specific company in order to target Lancaster. You know, maybe I'll add it on my buy list for this week. So Genuine Parts and Lancaster are two companies that are both on my buy list right now. Las Vegas Sands, it cut their dividend. I'm not going to be adding any more equity. It only had $399 in it as it is, so it's not like it's not hurting the portfolio overall. It's down roughly 15%, so not as bad as actually Altria or any of these other companies. So with time, I do believe Las Vegas Sands will recover. UGI Corporation, this one goes ex-dividend this month. Let's go ahead and pull that one up. Also, WP Carey is also down. It goes ex-dividend this month as well. Let's go ahead and pull that one up. Stanley Black & Decker, that one is also going ex-dividend this week. I have that one pulled up at the moment. And that, oh, there's another one here, Waco. Now, Waco, we bought some of Waco last week, but the thing with Waco is that they already went ex-dividend. They went ex-dividend last week on Thursday, as we covered here. I believe earlier in the video I kind of mentioned it. So they went ex-dividend on 28th. UGI Corporation goes ex-dividend in June. So I'm going to go ahead and move Oh, we are in June. So it goes ex-dividend in June. Let's see. WP Carry, this one has not declared a ex-dividend, but this website recently revamped the way that they kind of display information. So they go ex-dividend roughly at the end of June. So we'll say around June 27th. So I'm going to go ahead and move that one towards the end here. Next, we have UGI goes ex-dividend on the 12th. This is the 4th. So I'm rearranging these in the order that they go ex-dividend, and then we'll kind of go through them together. Ex-dividend. Stanley Black & Decker already went ex-dividend on the 1st, which is today. So as of today, Stanley Black & Decker has already gone ex-dividend. And let's see here. So Stanley Black & Decker should be paying me roughly $337 in this upcoming dividend payout. And they're down roughly 9.37%. They did, I believe, a nice little bounce this week, right? So for the week, Stanley Black & Decker up 3.15%, so fairly good. So Waco Group is out of the picture. They've already gone ex-dividend. Stanley Black & Decker out of the picture. They've already gone ex-dividend here today. Genuine Parts is going ex-dividend in 2 days, so they're on my buy list. Lancaster goes ex-dividend in 6 days. They're on my buy list. UGI Corporation. UGI is right there. I'd like to add roughly $500 into this company. UGI is down 8.10%, has a current yield of 4.08, 34 years of growing and paying out dividends, a very low payout ratio, consistent utility that, everyone has to pay their utilities. So I would say UGI is a very safe bet. 10 days away. I'll probably end up buying that one next week as well. So we have these two that I'm going to be buying this week because Genuine Parts goes ex-dividend this week. Lancaster goes ex-dividend next Monday. UGI goes ex-dividend in 10 days on the 12th, which is next Friday. So I have time next week to buy UGI. I'm just going to make a note here. Next week, UGI. And next week's dates are 8 through 12. So week 8 through 12. We'll just say week 8 through 12. We're going to be buying UGI. WP Carry goes ex-dividend towards the end of the month and is the only other company that I would add equity into at this time. WP Carry, I'd want to add roughly $100, and I do think I'll get the opportunity in the upcoming weeks to add more equity into it as it gets closer to its ex-dividend date. So that is how we've kind of decided what companies to average into. We are going to be buying two companies. These are going to be Genuine Parts and Lancaster. So we have that $50.23 in the account. So $25.13 is how much we're putting into these two companies. So Lancaster here is, minus $25.13. And what was the other one? Genuine Parts, right? I know I just saw it. There it is. Okay, so these values will go down to 474, and I'll adjust that here in just a second. So Lancaster and GPC. So back into the portfolio, GPC. Even though it went up 7.86%, it is still down by 6.56%. So this could essentially be the last time that I'm able to average down on it before it kind of pops back up. It doesn't have a whole lot of equity. If I had more cash available, I'd pour more cash into it during this time, but I just don't have the cash in order to, I want to keep this account dollar cost averaging for the remainder of the year. And that's the thing with Roth IRAs. Even though you can invest more capital, with the restrictions of $6,000 a year, it kind of makes it a little bit tough. And Lancaster right there. So these are the two companies that we are buying today. Let's see here. Did I put in another buy somewhere? So view and 2513 Genuine Parts. So what is going on? Oh, I may have clicked on the wrong one, right? Buy sell. Okay, so what am I doing incorrect? Available for order 2510. Oh, Oh, yeah, okay. Yeah, my math is terrible right there, so there we go. Okay, so we have made our buys. We've set up our buys here on the M1 Finance platform. We're buying $25.13 of Genuine Parts, and we're buying $25.10 of Lancaster. It's not a whole lot, but we're going to be adding equity into companies that are down in the moment. Lancaster being just down slightly, negative 0.29. Tomorrow will probably be positive, and that'll be the last time that it'll just be available to buy at this price. And Genuine Parts is down by 6.56%, but say it has another positive week as it did this past week, that may be the next time to add into that one as well. Plus, they go ex dividend in a few days and next week on Monday, so they will not be buying. I will not be buying more of them in the future as they kind of move that way. So I'm going to go ahead and adjust these down, and whoop, there we go. And UGI is on the chalk block, and also WP Carry. So these two companies are on the chalk block to invest in the upcoming weeks if there are no other options available. You know, if something goes negative this week by quite a bit and creates an opportunity to invest for us, then we'll definitely look at that as well. But that is going to be it for today's video. Let me know in the comment section below, what are some stocks that you guys are buying? Why are you buying them? I've seen a lot of mentions of, what was it? Of Costco and Lowe's, you know, with Lowe's shooting up so much after earnings. So let me know in the comment section below, what companies are you looking forward to buying more of in the upcoming weeks? You know, do you think the market's going to go higher here in the short term, or do you think it'll kind of fall back and take a breath? Let me know your comments down below, and that is going to be it for today's video. Remember to like, comment, and subscribe to the channel if you do enjoy this content, and that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.